Hello and welcome to BYJU'S Exam Prep IAS. In today's live session, let's have a discussion about the remaining chapters in the Economic Survey 21 and 22. And if you are listening to this particular lecture or having a look at this particular lecture for the first time and wondering, please understand, go to BYJU'S Exam Prep YouTube channel. There is already a video about the first part of the Economic Survey discussion, and also there is a detailed discussion about the budget which was provided by the government or announced by the government very recently. Please have a look at both of those particular videos, then look at this particular video. And meanwhile, when you are watching those particular videos or watching this particular live stream, do not forget to subscribe to BYJU'S Exam Prep IAS. So with this particular caveat, let's begin this particular discussion. The first part that I will be discussing is related to the monetary management and financial intermediation. You don't have to be worried about the headline or the name of the chapter. If you can understand the concepts, more than sufficient. This particular chapter basically deals with what reforms or measures have been taken by Reserve Bank of India in the market, essentially with respect to supply of money, stabilizing the yield rate in the market, etc. So this graph basically provides you the information related to how has RBI, or let's say Monetary Policy Committee, managed the repo rate as well as the reverse repo rate. Is it okay? Both are very important. Repo as well as reverse repo. How they have moved in the last couple of years. RBI has kept on reducing the repo as well as the reverse repo, both of them. And what you can see is basically from the mid 2020, both repo as well as the reverse repo are at the lowest rate in the last one decade. Remember this. The repo as well as the reverse repo, whatever is the rate today, it is at the lowest rate in the last one decade. Now why this has been done by RBI? Very simple. Because of the pandemic, there was a lot of distress in the economy. A lot of companies, MSME sector was struggling. In order to provide the relief, in order to promote a recovery in the economy, the Monetary Policy Committee has actually reduced both the repo as well as the reverse repo. And whenever you reduce the repo as well as the reverse repo, what you expect is the money supply in the economy will increase, the rate of interest will drop down or go down, the credit will be available at a cheaper rate of interest, companies can take more loans, consumers can take more loans, and that will basically promote a recovery through the demand recovery in the economy. Now going forward with respect to this particular policy, in recent times, please understand this is not discussed in the survey, but I am just connecting it to current affairs. Going forward, now there is a recovery that is taking place in the economy. It is expected that Reserve Bank of India will start increasing the repo as well as the reverse repo in the coming days. Having said so, in the recently announced monetary policy review, the committee has clearly stated that their priority right now is to ensure that the recovery happens and this particular recovery is sustainable, and that is the precise reason even in the recently announced policy they did not increase the repo as well as the reverse repo, which was a surprise considering what is the inflation rate in the market. That is for Indian economy. But RBI's expectation says that for the current financial year, inflation rate will be somewhere around 5.3%, and for the next financial year, it has estimated an inflation rate of 4.5%. Remember this. And that is the precise reason why RBI is saying that we want to continue with the accommodative monetary policy, because the inflation rate expectation is within the range of 2% to 6%, and we expect that inflation will moderate in the coming days. Right? And that is the precise reason the RBI has continued having the same rate of repo as well as reverse repo. Done? Now in addition to this, what are the other very important points from this particular chapter that you need to understand? Some of the very important reforms that have been taken by Government of India as well as RBI in the last couple of years in the market related to, let's say, NPAs or related to money supply, maintaining the yield in the market, etc. are Government Securities Acquisition Program. Please be very, very careful. It was there in the current affairs. Second one is NARCL, National Asset Reconstruction Company Limited. DICGC, Deposit Insurance Credit Guarantee Corporation, has been there in the newspaper for the last 1 year. And regarding digital payments, more you discuss about digital payments or more knowledge you have about digital payments, guaranteed there will be certain questions using this knowledge you can answer in the UPSC exam. Now, what are the important points here that you need to make a note of? In the context of Government Securities Acquisition Program, remember this, RBI introduced this particular tool in order to repurchase, remember the term here, in order to repurchase certain amount of government securities from the market. The objective was very simple. In order to moderate or let's say stabilize the yield rate in the market on these particular G securities, RBI basically published a timetable. Is it okay? RBI came out with a timetable. What do you mean by the timetable here? RBI, for example, stated that in 1 quarter, RBI would be purchasing or repurchasing 1 lakh crore worth of G securities. And under GSAP 2.0, RBI stated that they will be repurchasing 1.2 lakh crore worth of G securities. Now, what is the importance of this information? Always remember this, under open market operation, OMO, RBI doesn't usually inform the market what is the value of the G securities, either they are basically repurchasing from the market. Right? They are not going to tell this to market. They are basically going to go to the market and start repurchasing based on the requirement. And under open market operation, they can even sell the government securities. Right? Please remember this. OMO is a tool used by the RBI under the monetary policy set of tools or credit control tools. Under that specifically quantitative set of tools, under which RBI can either sell the G securities or auction the G securities or repurchase the G securities. And as per the requirement of that situation, either to promote growth or to control inflation, RBI either sells the G securities or repurchases the G securities. Now, under GSAP, which is also a type of open market operation, what did RBI do? RBI basically told the market, in this quarter, I will be repurchasing such and such value of G securities from the market. And the object was very simple there. One, to give information to the market that RBI is conducting such a process, and that will provide certain comfort to the market participants. And why that is required? In the last 1.5 years, both central government as well as the state governments have been selling a large number of G securities in the market. And the investors in the market are concerned that there is too much of supply of these particular securities. In order to provide certain relief to these investors, RBI conducted Government Securities Acquisition Program. So, first round was conducted, second round was conducted, and very recently, this is not mentioned in the survey, but remember this, very recently RBI stated that RBI will not be conducting any GSAP program now. I will repeat the statement here. First round, second round was conducted, and very recently RBI has announced that they are going to discontinue the GSAP. They are not going to conduct anything under the GSAP in the future. That's the first point. Second, National Asset Reconstruction Limited, NARCL. Now, this was proposed by the government and has been set up by the government. But remember this, there are two entities here. One is NARCL and the second one is IDRCL, Indian Debt Resolution Corporation Limited. So, one is NARCL, second one is IDRCL. Now, what is the importance of this? Remember this, there are certain assets called as legacy NPAs, very, very important. There are certain non-performing assets which are referred to as a legacy NPAs. Now, before I discuss this, let me give a very simple point here. What was the reason for the government of India to set up NARCL when there is always the Insolvency and Bankruptcy Code, which can be approached by the banking sector. That is, Insolvency and Bankruptcy Code is there. Why the banks are not going to IBC to conduct the resolution of these particular NPAs? What is the need for, right, one more organization, one more institution here? That is one question. Second question is, there are asset reconstruction companies already present in India. Is it okay? They are ARCs which are already present in India. And as per the data given, there are 28 ARCs in India which conduct the same process, that is resolution of NPAs. So have a look at this. One potential question, right, or one very tricky question could be, when there is already a presence of huge ARCs as well as insolvency and bankruptcy, the code as such, why did Government of India propose and promote the setting up of NARCL? Reason is very simple here, understand this. The Insolvency and Bankruptcy Code will handle those particular NPAs which get created now. I can understand this. In the recent times, the NPAs which have been created, the IBC will handle those particular assets. ARCs are there. These particular NPAs which are already present in the system, they can also be handled by the ARCs. But the problem is, although there are 28 ARCs in India, the capital that they have is very less compared to the value of these particular NPAs. That is, under NARCL, we want to provide resolution for the loans, right, to the tune of around 5 lakh crore rupees. Is it okay? This is the amount of NPAs we want to resolve under NARCL. So have a look at this. These are very, very high value of NPAs. So the ARCs which are present may not have the capital, may not be having a size to handle these kinds of NPAs. And that is the precise reason Government of India has proposed NARCL, the structure of which will be working for a period of 5 years. Remember this. This will be working for a period of 5 years as of now, which will be resolving all of these particular NPAs which are there in the banking sector. Now, under this particular, right, concept of NARCL, the proposal is to first handle those particular NPAs which are having a size of 500 crore rupees. Is it okay? Which are having a size of 500 crore, and over a period of time, all of these particular NPAs would be addressed. Done? Now, with respect to this particular point, I said 5 lakh crore rupees. It is 2 lakh crore rupees. Just make a correction. It is 2 lakh crore rupees. We want to handle the NPAs to the tune of 2 lakh crore rupees in the next couple of years under NARCL. Then this is one more very, very important point regarding NARCL. Remember this. And NARCL has been set up. And one more very important point here is, in the NARCL, 51% of this will be there with the public sector banks. Remember all of these particular points. 51% will be there with the public sector banks, and in case of IDRCL, 49% will be there with the public sector banks, and remaining 51% will be there with the private sector banks. That is, just to put it in a nutshell, the ownership is vice versa in both of these institutions. In case of NARCL, 51% with PSBs, remaining 49% with private sector. In case of the IDRCL, 51% with private sector and remaining 49% with public sector bank. Now, some of you might be thinking, sir, why there are two institutions? As per the proposal, from the banks, it will be the NARCL which will purchase the non-performing assets. Is it okay? And remember this, there is a Swiss challenge method which has been proposed here. Remember this also. There is a Swiss challenge method which has been proposed here. That is, imagine you are a bank, I am NARCL, I will approach you and simply say, sell me this particular NPA, I will give you 200 crore rupees, or let's reduce it and let's say 100 crore rupees. Now you will basically take it and try to find out if there is anybody else in the market who can top this particular bid from me. That is there anybody else in the market for the same NPA, he is willing to pay you more than 100 crore rupees. That is essentially the concept of a Swiss challenge model. So the bank will transfer or sell the asset to NARCL. Now NARCL will enter into an agreement with IDRCL, transfer the NPA to IDRCL, and IDRCL will conduct the resolution of the NPA. This is the model which has been proposed under this particular process. Done? Next one, regarding DICGC, Deposit Insurance Credit Guarantee Corporation. Very, very important. In the last 2 or 3 years, the concept of DICGC has been there in the newspaper. For whatever reason, so far UPSC has not touched this. Right? So please be very, very careful. Now what is this DICGC? Deposit Insurance Credit Guarantee Corporation. Now this particular DICGC is the wholly owned subsidiary under the Reserve Bank of India and has been set up with under the provisions of DICGC Act of 1961. And what is the role of DICGC? Any bank which receives a license from RBI, I'll repeat it, any bank or any authority or any institution which receives the banking license from RBI automatically will come under the coverage of insurance provided by DICGC. Remember this very carefully. And what is the insurance here? Earlier we started with insurance of the deposits to the tune of around 1,500 rupees. In 1993 it was increased to 1 lakh rupees, and very recently it has been increased further to 5 lakh rupees. So the deposits up to 5 lakh rupees in these particular banks will be insured under DICGC. That's the first very important point. Second very important point, earlier the premium that was paid to provide the insurance was kept at 10 paise. Is it okay? Earlier, the premium that was paid to provide the insurance was kept at 10 paise for every 100 rupees. It has been increased to 12 paise now. And even the government of India, after amending the act, has stated that if the DICGC wants, it can simply increase it to up to 15 paise. But so far it has been kept at 12 paise itself. That is the second very important change. Third very important change. As per Government of India, earlier, if a particular bank undergoes, let's say, insolvency, or there is a merger as a result of which there is a loss of a depositor's money, right? A bank incurs a loss and it is about to be shut down. The customers or the depositors were given money, but it used to take many years for the customers to actually receive the money. Now Government of India simply has put in a new setup or a new system wherein in the next 90 days from the date of the announcement, in the next 90 days, that is, imagine a particular bank is about to be shut down, that announcement is done. In the next 90 days, the money, that is the insurance money for the depositors, have to be provided by the DICGC. That is, in the first 45 days, the bank has to provide the information to the DICGC, and in the next 45 days, DICGC has to provide the insurance amount to the customers. This is one more very important change that has been done under the concept of DICGC. Done? So these are the three very important changes. Please be very, very careful. Now one potential question that can be asked by UPSC is, right, what kind of a deposits in which banks are not covered under DICGC? I will repeat it. What deposits under which bank will not be covered under DICGC? That is a very potential question. Please find it out. Okay. Now the last point, right, regarding the monetary policy, or let's say the announcements, reforms introduced by RBI as well as Government of India, is regarding digital payments. Right. Three important points here. In case of UPI, Unified Payments Interface, the transaction limit has been increased from 2 lakh rupees to 5 lakh rupees. Remember this, right? A very, very important point here. Remember this. Under UPI, so far, the transaction limit was actually set at 2 lakh rupees. Now this has been increased to 5 lakh. What is the advantage here? Acceptability or transfers, right, through the usage of UPI or the usage of mode of a transaction, that is UPI, will be further enhanced now with enhancing of the limit. Second, IMPS, Immediate Money Transfer System, right, or IMPS. Under this is available for 24/7 for 365 days now. Is it okay? It is available 24/7 for 365 days. And even under IMPS, the limit has been increased to 5 lakh rupees. Remember this also. Under IMPS also, the limit has been increased to 5 lakh rupees. And the third very important point here is regarding e-rupee. E-rupee, right? Remember this very carefully. E-rupee is a type of a digital voucher, right? We have discussed this in complete detail, right, in one of the explained sessions, right? So please understand this. E-rupee is a digital voucher which has been proposed, introduced by the government. Very important, right? Why? As such, this particular digital voucher will ensure that Government of India will be able to provide the benefits and ensure that the beneficiaries will be getting the right benefits henceforth. And e-rupee is basically a contactless, it is right a faceless type of a transfer of a voucher, right? It is the consumer or the beneficiary specific as well as it is a purpose specific. That is, when you issue this particular digital voucher, let's say for the purpose of ensuring that a beneficiary will get vaccinated, he shall use this particular voucher or let's say digital voucher only for getting vaccination. For anything else it will not be allowed to be used, right? That is the importance of e-rupee. And the best part of e-rupee is, unlike earlier schemes or earlier systems, the beneficiary doesn't need to have a bank account. Is it okay? Unlike the earlier schemes or earlier programs of the government, there is absolutely no requirement of the bank account for a beneficiary. That is the beauty of e-rupee. And I'll just add one more current affairs point here. Very recently the limit on e-rupee has been increased. Make a note of this. Very recently the limit on e-rupee has been increased from 10,000 rupees to 1 lakh, which is expected to further increase the adoption of e-rupee voucher. And second, now e-rupee vouchers can be used multiple times, unlike earlier situation where only once you are allowed to use the voucher. Until unless the funds in the e-rupee get exhausted, you are allowed to use the e-rupee voucher multiple times now. This is further expected to promote the adoption of e-rupee as a model of transfer of benefits to the beneficiaries. So these are some of the very important reforms that have been announced, right, in case of the market as such. Now, in addition to this, there is also one more discussion or one more point related to Digital Performance Index announced by Reserve Bank of India. Remember this. Announced by Reserve Bank of India, March 2018 is considered to be the base period for this particular index. And because understand this, you are talking about index, there has to be a base, right? Sir, for example, CPI is an index. Don't you think there's a base here there? GDP growth rate is an index. There's a base here. Index of industrial production, index of 8 core industries, wholesale price index, all these are indices. There is always a base here. So in the calculation of digital performance index, what does it represent? It basically measures how the digital transactions are being absorbed in the market. How is the penetration of these particular digital transactions happening? That is actually measured under DPI now. So announced by RBI, March 2018 is the base year, and very recently the Reserve Bank of India has announced that there is a huge improvement. The digital performance index for the month of September 2018 has been September 2021 has been more than 300 units, which essentially means compared to March 2018 where the base is 100, now the digital let's say the usage of digital instruments has been further increasing, or there is a huge penetration in the last 3 years, right? And what are the parameters? Please remember these particular parameters on which the DPI is actually calculated. First one, payment enablers, right? What do you mean by payment enablers? Weightage of 25% is given. Payment enablers essentially refers to mobile phones, Aadhaar, right, or QR codes, right, which will basically promote digital payments. Second, payment infrastructure from the demand side. And third one, payment infrastructure from the supply side. Sir, what do you mean by demand side factors as well as supply side factors? For example, supply side factors, banks, right, that is how many number of bank branches are present, right? Don't you think that is a very important supply side factor to promote digital transactions? And on the other side, demand side, credit card, debit cards, these are the examples of demand side factors. What about payment performance? Basically, the weightage given is 45%, right? By far the highest weightage has been given for payment performance. What kind of parameters are considered in the payment performance? What is the value of debit card transactions? What is the volume of debit card transactions? What is the value as well as volume of credit card transactions, etc. All of them are measured under payment performance. And finally, consumer centricity, which has been given the weightage of 5%, lowest weightage by far. Essentially, it measures how the frauds are being, right, basically taken care of. How are we providing information? How are we educating the customers about digital transactions, etc. Right, so all of these are some of the very important points related to digital performance index. Done? So please be very careful with respect to this also. Next, certain important points have been given with respect to the performance of Insolvency and Bankruptcy Code. Now, when we implemented IBC many years ago, the whole objective was we wanted to ensure that there is a protection of capital. Is it okay? There will be protection of capital. Either they will use the term protection or they will simply say preservation of capital. Sir, what do you mean by this? Very simple. Imagine I will set up a company. I will take a loan from you. I will default on the loan. Right? So you will basically drag me, file an application against me under Insolvency and Bankruptcy Code. That is to NCLT, National Company Law Tribunal. And let's say NCLT will accept this particular application. Now the whole objective under Insolvency and Bankruptcy Code was to ensure that though I have not repaid the loan to you, we will not be shutting down the company. We will not be liquidating the company. What do you mean by liquidation here? Liquidation essentially means you are basically dismantling, right, winding up the company. If the company has machines, you will sell the machines to somebody else. If the company has a land will be sold to somebody else. If the company has a manufacturing facility, it could be sold to someone else. So the whole company as an entity will be broken down. No more company will be existing. Right? That is called as a liquidation. But please understand, whenever you conduct liquidation, it is essentially a destruction of capital. Why? It takes many months or many years to set up a company and ensure it will start manufacturing goods and services. Because go back to the basics of economics. 4 factors of production: land, labor, capital and entrepreneurship. Now don't you think the entrepreneur, that is the owner, has taken so much pain to put together all of these particular factors and the company is set up. Now under IBC, what if you simply break the company? If you liquidate the company, you are destructing a particular company, you are destructing the capital. So the whole objective of Insolvency Bankruptcy Code was preservation of the capital. Now you will simply ask me, sir, how can you preserve the capital under IBC? Let's take the same example. I have set up a company. I will take a loan from you. I will default. You will go to NCLT, file a complaint against me. Rather than liquidating, what if this particular company is sold to another company, ABC? Is it okay? It will be bought by another company, ABC. And this particular company, ABC, will continue with the manufacturing activity in this particular company. Employees will be there in the same company. Machines will be used in the same company. Manufacturing activity will be continuing in the same company. That is the preservation of capital. So whenever they talk about IBC evaluation, one of the very important parameters that you need to consider is how many of the cases are getting liquidated, how many of the cases are basically going through the insolvency resolution. And under IBC, right now the situation is that most of these particular cases under IBC are essentially going through liquidation. Remember this. And to prove that, there is a standing committee report also, or parliamentary standing panel report also, which says the same thing. A large number of cases under IBC are essentially going through liquidation. That is not achieving the objective of IBC. So what has been the evaluation as per the economic survey? As on September 2021, the code has rescued 421 CDs. CD essentially stands for corporate debtors. Okay, right? CDs through resolution plans and referred 1419 CDs for liquidation. Have a look at the ratio itself, you will understand. The number of cases or number of companies which have been referred for liquidation are more than 3 times compared to the number of cases which have been provided insolvency resolution. And what is insolvency resolution? Company is sold. Is it okay? Company is sold to a new buyer. That is insolvency resolution. Out of 1640 ongoing CIRPs, that is corporate insolvency resolution process, nearly 75% of the cases have been going on for more than 270 days. And why this is also very important? We introduced IBC and stated that we will provide a time-bound insolvency resolution for you. Have you understand this? We will provide a time-bound insolvency resolution. That is, initially it was 180 plus 90 days. Now it is 270 plus 60 days. That is maximum 330 days. But look at the data here. More than 75% of the cases have already crossed the time limit of 270 days, which essentially means more time is being taken for conducting the process here, which needs to be addressed. The financial creditors have recovered 32%, right, which essentially means if they were owed, right, or if they were supposed to recollect, let's say 100 rupees, out of the process they have been able to collect around 30%. But mind you, understand this very carefully. Looking at this particular number, you might feel rejected or dejected by the process of IBC. Sir, they are losing so much money. RBI governor last year has basically stated this is much better than what recovery they used to have under SARFAESI Act or under the Debt Recovery Tribunal Act or etc. Right? They used to have much lower recovery. And in fact, the RBI governor went on and said that before the pandemic, the recovery was somewhere around 45%. But because of the pandemic, the recovery has actually fallen down to below 40%. Right? So, you will have to wait and see whether the recovery will again pick up. The 421 CIRPs, which have been yielded resolution plans by the end of September, took an average of 428 days, which is again more than 330 days. And finally, look at the behavioral change now. The survey says that the corporate debtors, that is the companies which have borrowed money, earlier they were not concerned. But because of IBC, now there is always a fear amongst them. That is, if I don't repay the money, either to a financial creditor or an operational creditor, if I don't repay the money, they will simply take me to NCLT and I may end up losing the ownership of this particular company. There is every possibility of me losing ownership. And that particular fear has actually changed the behavior of the corporate debtors. Now they are trying to ensure that any stress in the company, any repayment has to be done. They are trying to ensure that it is done on timely basis. And that is the biggest takeaway from this particular insolvency and bankruptcy code. Done? So these are some of the important points. Have a look at it. Next, related to discussion about the prices and inflation. Now what are the points here? In recent times, the CPI as well as the WPI in the context of India have been rising up. But the data that is given in the economic survey, right, for example, this particular graph here, basically talks about consumer price index, and that too till December 2021. After that, right, especially the WPI has risen up. I'll show you in the next graph itself. Right, CPI is also higher, food inflation is higher, core inflation is higher. But more importantly, what you need to infer from the graph, there are certain countries such as USA, certain countries such as UK, or for that matter, the peer of India, Brazil, which have been experiencing a higher rate of inflation. There has been a sudden spike in the inflation rate. And if you have been reading the newspaper, you will know this. USA has been experiencing the highest rate of inflation in the last 30 years. And day for yesterday, the inflation rate that was reported in UK is the highest in the last 30 years. Whereas in the context of India, if you basically look at, right, the inflation rate, majority period of the time, it has been hovering between, it has been floating between the two extremes, that is a 2% and 6%, which are mandated under monetary policy framework agreement or inflation targeting concept. In fact, for majority of the period, they are extremely between, or they are between 4% and 6%. Under MPFA, the RBI is supposed to maintain the inflation rate at 4%, right? But there is a leeway, right? There is a leg space which has been provided. It can allow it to reach up to 6% also. So have a look at this. For majority of the period of the time, inflation has been floating between 4% and 6%. Now, what are the reasons why in case of countries such as USA, Brazil, or for that matter UK, inflation rates are trending upwards? Reasons are very simple. The governments in these particular countries have given a huge amount of fiscal stimulus, given money to the households. Now, as a result of which, plus, understand this, these households during the period of pandemic reduced their consumption demand in the market. Now, there are households which have received money from the government. There are certain households which had reduced the demand in the market. Now, this is called as a pent-up demand. Pent-up means we reduced during pandemic. Now, we will start consuming more and more goods and services. Right? So, as a result of both of them, the demand in these particular markets has actually increased by a very large margin. Demand has increased. Right? And on the other hand, there are also certain supply side issues, as a result of which the market prices have increased. For example, availability of containers, the freight rates for international transportation, availability of raw materials such as steel, aluminium, or availability of intermediary goods such as semiconductor chips which are used in the manufacturing of cars, vehicles, etc. All of these particular factors put together, the inflation rate is trending upwards in these particular countries. Done? Now, what is the context of India? What is happening in the context of India? The WPI has shown an upward tick in the year 21-22. For example, have a look at this. Right, this is WPI. There is a sharp upward tick in the WPI. And what has happened with respect to CPI? The retail inflation, that is CPI, was slightly above 6% in 2021, but has moderated during the current financial year, and for the year April, for the duration April to December, it is around 5.2%, within the range of 6% itself. But in the context of WPI, please understand this. What are the reasons? The survey gives you reasons why there is an uptick in the WPI. The reasons which are cited are: one, the impact of a base year. Is it okay? There is a base year impact. That is, whenever, not a base year, base effect. Just make correction here, base effect, not a base year impact. Base effect essentially means you are comparing the price levels of one month with the prices of the same month in the previous year. I can understand this. In the context of CPI, WPI, they'll say for the month of March, it is this much. For the month of April, it is this much. What are they comparing? They're simply taking the prices of the commodities in, let's say, March of 2021, and they will compare what has happened to the same commodities in the March of 2022. They will compare it, and then they will say the month inflation rate is this much. So imagine for the period of March 2021, the prices were very, very low, very, very low. But in the March 2022, because of, let's say, international crude oil prices, because of vegetable prices, because of, let's say, pearls prices, etc., price levels are very, very high. So you are comparing the March 2022 where the prices are very high with March 2021 where the prices are very, very low. Don't you think the base will have an impact on what is the inflation rate for the March of 2022? So one important point why there is a sharp upward tick like this is the base effect. Okay, that is one very, very important reason. And second reason is the rising input cost, right, as well as the global commodity prices have started contributing to WPI. Always remember this, WPI is very, very sensitive to input cost. Is it okay? WPI is very, very sensitive to input cost. When the input cost will rise, WPI suddenly will show the reflection of that. And if a question is asked in UPSC, remember this, WPI is much more sensitive and you will see much more cost push inflation under WPI. Is it okay? You will observe much, much higher the impact of cost push inflation under WPI, because the prices of steel rises, prices of crude oil rises, suddenly you will see the WPI also picking upwards like this. Done? Now if you compare both CPI and WPI, how both of them have moved. there is a concept called as CPI and WPI divergence. And you will see that in the last couple of years, there is a huge difference between both WPI and CPI. For example, in the month of May, is it okay? For the month of May 2020, the difference between CPI and WPI was almost 10%. Is it okay? Right, it was almost 10%. But now, the divergence between both CPI and WPI has actually come down. But please understand, earlier, the WPI was hovering at earlier the CPI was hovering at a higher level compared to the WPI, and now the WPI is at a much higher level compared to CPI. Now, two important questions here. Sir, why? Why this is happening? And second, why are you discussing this? Is it related to UPSC? Tell me that first. I will answer both of them. First, why does this happen? Why can't we have both CPI and WPI in the same direction, either moving upwards or moving downwards? Very simple. There could be base effect on this. Is it okay? There could be base effect, and that will also play a very important role. Second, the commodities that are covered under both of them are different. I can understand this. The commodities, that is a basket, is different under both. For example, in case of a WPI, we cover 697 commodities, whereas in case of CPI overall for India, we consider 299 commodities. Right? And within this only, CPI covers both goods and services. WPI considers only goods. I can understand, WPI considers only goods. And even if you consider what is the weightage given for the goods, it is a different in case of WPI, it is a different in case of CPI. And as a result of all of this, don't you think, right, if the prices of vegetables start increasing at a higher price, CPI will be reflecting more of that. And if the prices of crude oil, price of manufactured goods start rising upwards, WPI will be reflecting that. Why? In case of WPI, manufactured items has a weightage of 64%. Whereas in case of CPI, the highest weightage is given 46%. Again, I am saying 46. Don't say, sir, it is 45.8%. I am rounding it off. 46% for food and beverages. So obviously, the commodities are different. The points at which it is collected is different. WPI doesn't consider the taxation. CPI considers the taxes. Right? So look at the differences in the collection, the coverage, etc. And as a result of this, there will be a divergence at many points of time between both the WPI and CPI. Address the first question. Let's go to the second question. Sir, is it relevant to UPSC? Definitely yes. It is always relevant to UPSC. And that is the precise reason I am discussing. What is the relevance, sir? Whenever WPI is inching higher like this, I can understand WPI is increasing at a very faster pace, CPI is very moderate, WPI is very high. What could be the reason? Fuel prices could be the reason. Right? Or input costs are rising. That could be the reason. And always remember this. Today the CPI could be very moderate. But if the situation continues, I can understand this? If the situation continues, after a couple of months, or let's say after 6 months, 8 months, it varies. You will see that there is a rising trend in the CPI also. Sir, why? Why it is connected? Very simple. WPI measures when the transactions are happening between B2B, that is business to business, trader to trader, company to company. Right? Imagine one company is selling goods to another company, raw material, intermediate good, etc. I will consider the price level in this market, I will calculate a WPI. And if the WPI is rising, it simply means the cost of input, raw material is increasing. Right? The companies immediately may not transfer this to a customer in the market, but how many days will the company keep on taking the higher cost? There will come at a point of time when the company will simply say, enough is enough, increase the market prices of the commodities. And when the companies will start increasing the market price of the commodities, that is where it will start affecting all of us. Right? Retail prices will start increasing and that will contribute to CPI. Right? So there is a huge importance of studying this divergence. Right? And that is the precise reason the policy making of RBI will also be affected looking at what is the divergence between both CPI as well as the WPI. Done? Right? So this is one important point I wanted to discuss. Next, In the recent times, in order to control or address this inflation, various measures have been undertaken. What kind of measures? Have a look at this. In the context of pulses, Government of India has set up a buffer. Buffer means procure and store some additional crops. And what is the usage? Remember this, government will have a buffer for wheat also, right? Government will have a buffer for rice or paddy also. And for pulses, based on the recommendation of Arvind Subramanian committee, government has started maintaining certain buffer. And whenever the price of pulses start shooting through the roof, increasing, government will introduce the buffer into market. Second, import duty as well as agriculture infrastructure development cess. AIDC stands for Agriculture Infrastructure Development cess. AIDC and import duty have been reduced by to 10% and 0% respectively. And what is the objective here? Once you reduce the duty and cess, we are expecting the imports will become cheaper and contribution to inflation automatically will come down. And third and fourth, both are related to pulses here. Government of India has entered into a memorandum of understanding and has revised, right, or extended a memorandum of understanding with countries in order to import pulses for the next 5 years. Right, for example, tur, urad are the pulses generally covered in these particular memorandums. And with this, we are expecting there is a stable supply which will help us controlling inflation in the market. In case of edible oils, future trading has been suspended. We have covered this already. Right, in the current affairs, we have covered it. Right, the future trading actually led to certain speculation in the market. People started hoarding these particular commodities, as a result of which supply got disrupted, prices started soaring in the market. So government has basically banned or prohibited the future trading of these particular commodities. Duty on edible oil also has been reduced. Logic is same, imports will become cheaper. And finally, with respect to perishables, government initially introduced a scheme called as Operation Green Scheme, under which government covered TOP, top, tomato, onion and potato. Now this has been extended to cover 41 perishable items. Is it okay? Earlier we covered only 3, tomato, onion and potato. Right, now this has been extended to cover 41 perishable goods, and the new name of the scheme is Operation Total. And this has helped in cultivation and supply of these particular perishable commodities in the market. And in order to protect the interest of the farmers, especially in case of perishable items, because there are certain regions where there is surplus production of this, and there are certain regions where there is a deficit, that is the supply is lesser than the demand. In order to ensure that these will be moved from the surplus area to a deficit area, government has arranged or launched Kisan rails. And these rails will help in movement of these particular perishable items. Right? These are some of the reforms which have been undertaken by the government in order to control the price levels in the market. Now what more should be done by the government? What is the way forward? Change the production pattern. Right now, majority of the land that is used for cultivation is used for paddy and wheat. Rather than promoting cultivation of both of them, why don't we ask the farmers, or why don't we give certain incentives or promote more and more cultivation of pulses in India? Because further in the discussion you will realize this. India is importing huge amount of pulses into India. Can you understand this? India produces, right, it is one of the largest producer of pulses, but despite that we also import huge volume of pulses annually. So why don't we promote, right, or why don't we provide certain reforms as a result of which farmers will shift the cultivation? We should have a calibrated import policy. Generally government provides a knee-jerk reaction. Knee-jerk reaction means, imagine the price of onion are rising very fastly, government will impose a restriction on storage of it. Government will impose export quotas. These are all knee-jerk reactions. And these generally send a very wrong signal to the market. So rather than having like this kind of a knee-jerk reaction policy, why don't we have a policy which is very calibrated, wherein, right, we are ensuring that there is a continuous supply in the market somehow. For example, The survey says that the recent announcement of Memorandum of Understanding in terms of import of pulses will always ensure that we are going to import the pulses, and whenever there is an issue with that, we are going to import it and ensure that the prices will be moderated. That is a calibrated policy. Third, we will have to focus on development of a transportation as well as a storage infrastructure. Why? In certain seasons, cultivation is very high, wastage is there, and in certain season, cultivation is very less, supply is very less, and the market prices start soaring or increasing. We will have to manage. Is it okay? We will have to manage, and one way that it can be done is basically have a better transportation as well as a storage infrastructure. Okay? So these are some of the very, very important reforms that should be undertaken or implemented in a much better manner. Next, discussion related to agriculture and food management. First and foremost, how the agriculture sector has performed in the last couple of years. That is essentially from 16 and 17 till 21 and 22. If you see that, first very important point that you need to remember is, agriculture sector every year has contributed or has experienced a positive GDP growth rate, or positive growth rate, sorry, not GDP growth rate, positive growth rate. Because in the year 20, right, 21, etc., we have seen various industries, various components of service sector have experienced a contraction, negative growth rate. But agriculture sector in all these years, the annual growth rate always has been positive. But in the year 2021, right, in the year 2021, agriculture sector has contributed 3.6% thanks to the policies of Government of India, thanks to good monsoon that we have received, etc. Right, and in the year 21-22, we are expecting the agriculture sector to grow at 3.9%. Now, in addition to this, what has been the contribution in terms of GVA, gross value addition? What has been the contribution of agriculture sector in terms of GVA? Have a look at this, right? From 2018 and 19, the contribution of agriculture sector to GVA has been increasing. It was around 17.6%. It has hit more than 20% in the year 21, and for 21-22, basically for April to December, where we are basically saying that it is 18.8%. Right? And what you need to remember? Generally around 18% on an average. Is it okay? On an average, generally around 18% contribution has come from agriculture sector to the GVA. Remember that particular point. Now, what are the important points in the agriculture sector? If you want to promote more and more production in the agriculture sector, you need to invest more. Is it okay? The investment has to increase. And it is not any important or any difficult issue to understand. In the budgeting we have discussed, Government of India wants to increase capital expenditure. In the manufacturing sector, in infrastructure sector, government wants more and more investment to be done. Same thing is applicable to agriculture sector. We want more and more investment to happen. But what is the status of the investment currently? The public sector investment or public investment that is generally done by the government has been in the ratio or in the range of 2 to 3%. Is it okay? Can you see this particular orange line? The public investment, that is investment done by the government, has been hovering in the range of 2 to 3%. Neither it has crossed more than 3%, nor it has fallen below 2%, right, in this particular decade as such. But if you see the overall investment, the green color line, the total investment, it is zigzagging. I can understand, in 1 year it is increasing to more than 18%, in another year it is falling to around 15%. There is more volatility in case of overall investment in the agriculture sector compared to, right, the investment done by the public, right, that is the Government of India. Why this is happening? A simple reason to that is the private sector investment. Have a look at this. The private sector investment is having a higher impact, and it is also very, very high compared to the government's investment. The private sector investment generally has hovered between 12% to around 16%. I am giving you a range. It has hovered between 12% to 16%, and this has been the influencer on the overall investment volatility in the agriculture sector. So what should be done here? One, because the private sector investment is very, very important, government should implement certain policies which will increase the private sector investment much further. Having said so, it doesn't mean that government should not increase its own investment. It is very, very low, 2 to 3%. You will have to increase even the government's investment. Third, government should ensure that cheaper credit is available to the private sector so that they will be able to borrow and invest in the agriculture sector. And the fourth very important point here, government has already announced Agriculture Infrastructure Fund, AIF. It should ensure that the investment will be promoted or investments will increase at a very faster pace by effectively implementing AIF fund. Done? So these are some of the points here. Let me go to the next one here. Related to the production and the import of oil in India. Right? That is generally about vegetable oil or edible oil, and specifically the second part, right, is related to, right, the import of these particular oils. First one is related to production, second graph is related to the import of, right, this particular oil as such. So understand this, what has been the trend of production in the oil seeds? First you will produce seeds, you will process the seeds, you will get the oil, right? Don't say, sir, two graphs for the same thing. No. Second graph is related to oil, that is the output. First graph is related to the input, that is the raw material, oil seed. Generally we will see that there is a rising trend, especially in the last 5 years, there is a rising trend of production of oil seeds in India. Is it okay? There is a rising trend of production of oil seeds in India. But please understand, just because you increase the production of oil seed doesn't mean that whatever is the demand in the market will be satisfied. Because in case of India, traditionally the demand for vegetable or edible oil has been much higher compared to what is the production of edible oil in India. So despite increasing the production of oil seeds, there is a very high demand, there is a scarcity or there is a deficit of the edible oil in India, and as a result of which you will see that there is a huge import of the vegetable oil or edible oil into India. And this, right, if you see this is very high in case of India. You can understand the import of edible oils or vegetable oils is very high. Even Government of India report says that in one of the year 90,000 crore rupees was spent on import of edible oils. It has been generally more than 70,000 crore rupees. And that is the precise reason now Government of India wants to promote production of oil seeds. Promote processing of oil seeds into edible oils. Now if you ask me, sir, why this is happening in India? Why the demand is rising? An answer to this is very simple. The demographic change is happening in India. Is it okay? Demographic change is happening. And this particular demographic change is also leading to change in consumption patterns. Is it okay? It is also leading to change in consumption patterns. The demand for processed foods is actually increasing in India. And whenever the demand for processed foods increases, obviously the demand for cooking oil will automatically increase. Right? And that is the reason why there is very high demand for these particular oils in India. Now specifically about, have a look at this palm oil. Right? Specifically about palm oil now. What has been the production of palm oil here? Right? The production of palm oil generally has been in the range of 1.7 to around 2.8 lakh tons in India. Whereas the demand is much higher, very high. And what you will see is majority, right, majority of this particular demand for the palm oil is actually satisfied with import of this particular palm oil. Is it okay? We are importing huge amount of palm oil into India. So what is Government of India doing in case of this? One, Government of India has launched National Food Security Mission, NFSM. Right, under this they are targeting 8 commodities. They want to increase the production of this. They want to increase the area which is used for the cultivation of this. For example, paddy is covered, wheat is covered, right, oil seeds, palm is covered, right, pulses are covered, etc. So NFSM is one scheme which has been implemented by the government. Right, and second one is the national, basically the promotion, national mission for promotion of production of edible oil and oil palm. This has been launched last year itself. Under this, we are targeting the cultivation of more and more the palm trees as such, and we want to produce more and more palm oil within the domestic market. So these are the two very important reforms that have been announced by the government in order to address the issue of import of the edible oils here. Done? Next, with respect to sugar, what are the important points? Have a look at this. In the last 1 decade, remember this, I'll give you a context. In the last 1 year, there has been a lot of discussion with respect to sugar in the current affairs. So a trend-based question can be asked in the prelims. In the last 1 decade, what you can see or what you can observe is, in case of India, right, the production, okay, the production of sugar is higher than the consumption of sugar. Is it okay? The production of sugar is higher than the consumption, except 1 year. Remember this, except 1 year, that is 16 and 17. So generally this particular trend, right, you can see that India has become a surplus country. Is it okay? Surplus country in terms of sugar production. And by the way, India is the second largest producer of the sugar in the international market. Second largest. And India is the largest consumer of sugar in the international market. Now, what are the reasons why this particular trend can be seen in India, where there is a surplus production of sugar? Very simple. Government of India announces FRP for sugarcane, and the FRP for sugarcane has kept on increasing in India. For example, have a look at this. In the year 11 and 12, FRP announced was 145 rupees, right, per quintal, and by 21-22 it has been increased to 290 rupees. That is, in the span of a decade, FRP has doubled. Right, that has given certain rewards, or let's say it has provided a protection to the farmers, as a result of which the production has increased. And on the other hand, the state governments which announce SAP, state advisory prices, and in case of many of the states, the SAP is higher than FRP. That also has also helped in increasing the production of sugar. The central government is providing incentives for the mills to export sugar into international market. It is incentivizing these particular mills to use it even for ethanol production. So because of these kinds of support measures which have been provided by the state government as well as the central government, the production of sugarcane, production of sugar has increased in the domestic market, and that is the reason why India has become a surplus country in case of sugar production. Done? Now, apart from this, there is one very important, right, issue that has been mentioned in the survey. That is a situational assessment survey. Remember the points here. SAS, situational assessment survey. This has been provided by NSO, National Statistical Organization, NSO. The last SAS was provided for the year 2014, right, was given in the year 2014, and the latest one, which has been announced very, very recently in the year 2021, right, is basically for the year 2018. Now, what are the important points in the situational assessment survey? Again, what is the importance of the survey? It will conduct a survey and provide information related to how the agriculture households are performing, what is the source of the income, what is the economic and social status of these particular households. So, what are the important points from this particular survey? The average monthly income per agriculture household has increased to 10,218 rupees as per the latest survey. Right, for the last survey which was published in 2014, it was 6426 rupees, 6,426 rupees, and it has increased to 10,218 rupees. And out of this particular total income, majority of the income for the farmers has actually come from 37%, right, in the form of the crop cultivation itself. That is, the farmers, how much they have earned by cultivating the crop and selling them in the market. That particular income accounts for around 37% of the total income, and that is the major contributor. Right, some of you might be thinking, sir, what are the other source of income then? Right, let's say animal husbandry, right, or let's say land has been given on rental basis to someone else. They are also working in some other fields and earning wages. There are so many other sources of the incomes for these particular households, but 37% of this particular income actually comes from the crop income itself. And second, the fragmentation of the land also has increased. Is it okay? The fragmentation also has increased. And have a look at this. The average size of the household ownership has actually declined from 0.725 hectares back in the year 2003 to 0.512 hectares in 2019. That is the latest survey data. What is the importance of this? One, remember the data, fragmentation has increased. Second, when the fragmentation increases, it simply means farmers are cultivating on a smaller piece of land now, which means now we need to invest, right, and develop certain technologies which can be applicable to small farmlands. Right? That is the importance of this particular study's application as such. So these are the two very important points provided in the survey. Go through these. Next, discussion related to industries. Okay, industries and infrastructure. What are the important points that you need to make a note of? One, with respect to MSMEs, micro, small, medium enterprises. What reforms or measures have been undertaken by the government in the last couple of years to promote, or more to say that to protect the MSMEs? For example, Government of India has changed the definition now. Right, remember this. Earlier, the MSMEs, micro, small and medium enterprises, were defined based on investment in plant and machinery. Is it okay? Based on investment in plant and machinery. Now this particular parameter has been changed. We are considering the investment, of course, in plant and machinery, plus we are also considering the turnover that is generated by these particular entities. To define what is a micro enterprise, what is a small, what is a medium enterprise. But in addition to this, one more very important change you remember. Earlier, government used to have a different definition for MSMEs in services sector, MSMEs in manufacturing sector. Now Government of India has done away with this particular difference. Same definition, considering investment plus a turnover, both for the manufacturing and services. Same definition will be used. What is the reason? Why did Government of India change the definition? One, this was a very long-standing demand. Is it okay? This was a very, very long-standing demand as such. Second, over a period of time, the investments in the MSMEs have to increase. For example, if I set up a manufacturing unit, let's say as a micro enterprise, I have been recognized so by the government, I have invested certain amount. If I increase the amount or if I increase the investment, cross the threshold, then I would be losing recognition. And as a result of this, many of the benefits which are available to me now, I will be losing them. Right? Don't you think government should address this issue? Because this definition was made 15 years ago. And we are talking about 2019, 2020 now. Right? That is the reason why Government of India has changed the definition of MSMEs. Right? To ensure that they will not be losing out on the benefits which are provided to them by the government. We will not end up having very small MSME units, very minute, small MSME units, but in larger number. Right? There is a concept called as a dwarfism. Is it okay? Dwarfism essentially means what? You have large number of MSMEs, but in terms of scale, they are producing very small unit of production. What is the point? It is better to have larger size of MSMEs which are producing more and more production. Right, so dwarfism issue will also be addressed by expanding the definition of MSMEs. Second, government also has expanded the list and reintroduced, remember this, reintroduced or reclassified the traders, that is the retail as well as the wholesale traders, under micro, small and medium enterprise definition. And so far, remember this, the benefit that these particular MSMEs will get because of the inclusion is just limited to priority sector lending loans only. Is it okay? Because once you are notified or classified as a MSME, you will be given access to host of benefits in the economy. But right now Government of India stated, yes, I will reconsider both retail as well as the wholesale traders as a part of MSME, but the benefit that they will get will be limited to only PSL loans. Right, and the third one, Uddham registration portal, right, very important. This is a portal which has been proposed by the government, set up by the government, which is considered to be a very simple portal wherein you don't need any documents to get your MSME registered. Is it okay? Under the Uddham portal, you want to be registered. For registration, you do not have to provide any kind of a documentation. Having said so, you need Aadhaar as well as PAN. You will have to submit the data. Only then your MSME unit will be registered under Uddham. Done? So these are some of the very important reforms. In addition to this, there is also Champions portal. Remember this. Champions portal. Right? This particular portal has been set up by the Government of India to provide a grievance redressal mechanism to MSME sector. Is it okay? To provide a grievance redressal mechanism. This Champions portal will also consist the information related to any new changes done by the Government of India in the context of MSME. The Champions portal will also try to integrate various other portals that are associated with the MSME sector. So these are some of the very important reforms in the context of MSMEs. Next, textiles. In case of textiles, two very important points. One, Government of India has announced PM Mitra Scheme. Remember this. Government of India has announced PM Mitra Scheme. Right? What is this Mitra Scheme? Mega Integrated Textiles Region and Apparel Park. 7 of these particular parks have been proposed currently under PPP. The whole objective is, currently we are seeing that the whole textile supply chain is fragmented in India. Is it okay? Right? There are various stages of production in the textile sector, and these are not happening at only one place. Rather, these are fragmented. These are spread throughout India. And the problem here is, when they are spread throughout India, transportation will take time, will add to cost, etc. So rather than suffering from all of this, Government of India has proposed an integrated park where all the supply chain activities will be conducted at a single place itself. And that is the whole concept of PM Mitra scheme. And the Government of India's document simply says that PM Mitra is focused on 5 F's. Remember the terms here. The PM Mitra scheme is focused on 5 F's. That is farm to fiber, fiber to factory, factory to fashion, and finally fashion to foreign. Is it okay? These are the 5s. Remember this question can be asked in UPSC either in the prelims, or if there is a question on PM Mitra in the mains, please mention these particular 5 F's. Right? So this is one very important reform. Second, man-made fibers, MMFs. Man-made fibers have been covered under production linked incentive scheme, and this is expected to incentivize, promote the production of these particular man-made fibers through the implementation of PLI. Next, in regards to infrastructure, two very important points here. One, National Infrastructure Pipeline, NIP, and the second one is National Monetization Pipeline. Remember, both are very important. Why? Right? All of us will agree, understand this, all of us will agree if I say that you need to invest more if you want to ensure that India will become a $5 trillion economy by 2025. All of you will agree with this statement? You need to invest more. And as per various estimates, India needs to invest around $1.5 trillion if they want to achieve the target of reaching $5 trillion economy as such. Now in the last 10 years, between 2008 to 2017, investment has been done, but the investment is not as high as it is required. So Government of India came out with the concept of National Infrastructure Pipeline, NIP, where the state governments, central government, and even the private sector will invest and develop infrastructure. Is it okay? All the three parties, state, center and private sector, will come, pitch in and start investing and develop infrastructure. And as per the estimates given by the government, initially we were about to cover 6,835 projects under this, okay, 6,800 plus projects. But over a period of time, more and more infrastructure projects have got added. Today, there are 9,000 infrastructure projects across 35 areas which will be covered under NIP. And what is the importance of this? It is estimated that because of all of this, we will have sufficient amount of investment, right? That is around 1.5 trillion. Most of the experts say around 1.4 trillion, which will help us to move towards making India a $5 trillion economy. That is the importance of national infrastructure pipeline. And what is given in this particular graph? Which are the important sectors, right, where majority of the infrastructure investment will be done under NIP. And related to NIP, that is the duration of NIP, there is one more concept, National Monetization Pipeline, NMP. Remember this. The duration or the tenure of NMP will be coterminous with the duration of National Infrastructure Pipeline. Now, before I tell you what is the concept here, these are the sectors, major sectors, which are covered under NMP, where Government of India wants to raise huge amount of money. That is, under NMP, the target is government should be able to collect 6 lakh crore rupees in the next couple of years, use that to invest and develop infrastructure. Now, question is, what is this NMP? Under the National Monetization Pipeline, remember this, government is not going to sell the assets, rather government will be leasing the assets. Is it okay? Government will not be selling the assets, government will be leasing out the assets for a duration of 30 years to the private sector. And when the private sector will take these particular assets on lease from the government, they will pay certain amount of money to the Government of India, and this process is called as monetization. Is it okay? They are monetizing, creating value for an asset in the market. Right? So, and one more point here, this particular NMP, National Monetization Pipeline, will mainly focus on the projects under railways, roads as well as power sector. And remember this, we are not going to target new infrastructure projects under monetization, we are going to target brownfield projects. Meaning what? Those projects which are already set up, either they are not being utilized by the government or they are being underutilized by the government. So only those brownfield projects which are underutilized or not utilized, unutilized, will be put up under the National Monetization Pipeline. Done? In the context of infrastructure, these are the two very, very important points. What about the services sector? What has happened to service sector? Generally understand this, service sector can be divided into two parts. One, contact-based services sector. Second one is a non-contact services sector. For example, contact-based, tourism, right, hotel industry, right, or hospitality industry, that's a contact-based. What about non-contact-based? Telecommunications, right, or for that matter, financial services, banking services, non-contact-based services. And the services, no doubt, pandemic has affected services sector. But within the services sector, the impact is uneven. I can understand this. It has not had a same effect on all the components in the services sector. Those components which do not require a contact, that is non-contact services, have not been affected. In fact, they have performed very well during the pandemic. Whereas the contact-based service sector has been affected very gravely because of the pandemic. In addition to this, right, have a look at this. The survey says that in the last couple of years, it is the services sector which has been the main sector to attract FDI into India. A majority of the FDI has actually flown into the services sector itself. And it is not just the FDIs coming into India. Service sector contributes huge value to GDP. Is it okay? Generally more than 50% of the contribution. Last week I have shown you the data. Generally more than 50% of the contribution to GVA comes from the services sector. So contribution is very, very high. and the service sector is also contributing to commercial exports. Is it okay? Service sector is contributing even in terms of commercial exports. That is, between 19 and 20, the total commercial service exports done from India have actually increased from around 3% of the total commercial service exports in the global market to more than 4% of total commercial service exports in the global market. So these particular service exports also have increased in the last 1 year. Okay. So these are some of the very important points regarding services sector. Now within this, certain important points regarding ports. Now generally in the context of ports, the efficiency of the functioning of the ports can be measured by looking at what is the turnaround time. Now you'll ask me, sir, what do you mean by turnaround time? Turnaround time essentially means, imagine this is a port, a vessel will come, right? I know, right, this doesn't look like a vessel, this doesn't look like a port. Don't worry, right? UPSC is not going to ask you draw a picture of vessel, not important. So have a look at this. Here is a vessel which has brought certain containers which have to be offloaded into the port area. How much time will the vessel take to dock here, offload and start going towards the next destination? Is it okay? From the point of arrival to the point of departure of the vessel, how much time is taken? That is referred as a turnaround time. So the turnaround time in the global market is around 1 day. Is it okay? The global average is around 1 day. In fact, the survey says that it was lower than this. It was 0.97 days, 0.9 days. But because of the pandemic, right, there have been certain measures which have been taken all over the world in the port sector. And as a result of this, the time that is taken for the turnaround has actually increased to around 1 day. Now, what is the situation in case of India? The survey simply says that it has, right, at major ports, it has declined consistently from around 3.6 days back in the year 2015 to 2.25 days in 2021. Average is 2.25, but there are many ports such as JNPT where generally around 1 day is taken for a turnaround time, which is the best time in case of India. Right, so on an average it is 2.25, which essentially means we further need to improve the performance, increase the efficiency in the port sector as such. Right, and have a look at this. According to UNCTAD, the median ship turnaround time globally was 1 day in the year 2020. Done? So these are 2 points regarding port sector which are important from survey for the UPSC exam. Now what about the patents? In fact, if you have heard to the speech of the principal economic advisor, when they discussed or when they basically laid down, right, certain points regarding the economic survey, right, during the press conference, this was one point that was actually mentioned by the principal economic advisor. Right, and what are the important points here? The number of patents which are filed in India and which are granted in India have increased. No doubt, they have increased. Have a look at the data here. 10 and 11, 39,400 patents were filed, and how many were granted? 7,500 plus. 2020-21, 58,500 odd were filed, and how many were granted? Right, around 28,400. So number of patents filed have increased. Number of patents granted also have increased. But more importantly, the survey says the number of patents which are filed by the Indian residents have actually increased. That is a positive aspect here. Right? Earlier what used to happen is the multinational corporations, they used to account for majority of the patents filed and approved in case of India. But as per the economic survey, the number of patents which are filed by the Indian residents have actually increased, which is a very good outcome. Have a look at this. Back in the year 2010 and 11, only around 20% of these particular patents were, right, filed by the Indian residents. Right, but by 2021, it has actually increased to more than 40%, which is a very good outcome. Now, regarding patents, the survey says that although the number of patents which are, right, applied for and which are granted have increased at a very high pace in India, India still lags behind compared to other countries. For example, in China, USA, Japan and Korea, you can see how many of these particular patents were filed in the same year, that is 2020 and 21. In China, 5.3 lakh patents were filed. USA, 3.5 lakh patents. Korea, 1.3 and Japan, 1.79 lakh patents. Very, very high number of patents, right, have been granted in these particular countries compared to, let's say, in terms of thousands in case of India. What are the reasons? Why there is right, such a huge divergence in these particular set of countries against India? Reasons are very simple. One, in India, the amount of expenditure that we do on research and development is very, very low. Right? How much investment we do on R&D? 0.7% of GDP in the year 2020. And last year's economic survey had made the same point but in a different way. The survey had stated that, one, the amount of investment that we do in R&D is very, very low. And second, if you look at where we actually invest in this particular R&D, majority of the investment actually goes into the space sector, the pharmaceutical sector, right, and automobile sector. But there are so many other sectors where we need to invest huge amount of R&D. So that is one point. Second point, there is a huge procedural delay, okay, to accord or to basically grant these particular patents. Huge procedure delay is there in India, and that is right for a very simple reason. The process that you are following is very, very complicated. In the survey, they have given a complete list of 7 steps which, right, the companies will have to follow to get a patent granted. Should you read that? Absolutely no, do not waste your time. There are 7 steps like this, and at each step there is one or the other issue, as a result of which there is a delay that happens, right, with respect to granting of these particular patents. However, the economic survey also notes that earlier we used to take somewhere around 64 months to provide the patents like this. We used to take around 64 months for all the process to be over. This has been dragged down to 42 months now. But this is not enough. Compared to, let's say, other countries, even today India takes a very, very high number of months to grant a patent. Have a look at this. Right, 20 months, 20.8 months, 15.8 and 15 months in all of these particular countries. Right, one more reason that is cited in the survey is, out of these particular steps that I was just referring to, there is one step where you need to have patent examiners. That is, the patent examiners will review and submit a report, give out a report. Again, what is the importance of the process? You don't have to read that. Right, the survey simply says that the number of patent examiners in India are very, very low. And when large number of applications are filed, number of patent examiners are very, very low, right, the process will be very, very late. It will basically put a drag on the process, and as a result of this, overall time taken for granting the patent will also get delayed. So number of patent examiners in the year 2020 were 615 in India. Compare that with these particular countries. In China, there were more than 13,000 examiners. In USA, more than 8,000. This is also one more reason why there is a delay in the granting of the patents, right, and that is hindering the whole process of patent system in India. Done? So these are some of the very important points. Go through this. Now next one, what about skilling reforms? What has the government of India done in order to promote skilling activity in case of India? These are some of the very important reforms that the government of India has taken in the last couple of years. First one is, under Skill India, there is a bigger umbrella scheme, Skill India. Government of India has introduced Pradhan Mantri Kaushal Vikas Yojana. Is it okay? Pradhan Mantri Kaushal Vikas Yojana. And under the Pradhan Mantri Kaushal Vikas Yojana, again there are 2 components, short-term training program and recognition of prior learning. Is it okay? Recognition of prior learning and short-term training program. Right, under both of them we have set up a target. We want to ensure that so many lakhs of people would be provided with skilling or certification under both of these particular components. Right, that is one very important reform. And please remember this, PMKVY 1.0 was implemented, 2.0 has been implemented, and last year Government of India implemented PMKVY 3.0. Remember this very carefully. Right, last year Government of India has implemented PMKVY 3.0, and what is the importance of 3.0 here? Unlike the earlier processes or earlier components of the scheme, we used to follow something called as a supply driven skilling as such. Now we have shifted to a demand driven skilling initiative. Right, what do you mean by demand driven? In case of this particular PMKVY 3.0, at the rural level or at, let's say, at the district level, there will be a council that is set up which will examine or which will find out what kind of skill sets are required actually by the industries in the surrounding region. They will survey, then they will ensure that these are the kind of skill sets which will be provided to the beneficiaries under Pradhan Mantri Kaushal Vikas Yojana, which will help us in ensuring that the labor that is supplied in the market will be a demand driven labor. Is it okay? A demand driven labor, meaning what? We are supplying labor to the labor market for which the companies are actually searching for. Done? So one is a PMKVY, second one is a eShram portal, very very important, was launched last year itself. Concept of eShram portal is we want unorganized sector employees to be covered under this. Is it okay? Right? We want them to register under the eShram portal. There are certain social security benefits. We will ensure that these particular workers who are present in the unorganized sector will be covered under these particular social security benefits. Right? That is the whole idea of a eShram portal. Then there is a Atmanirbhar, the skilled employees, employer, right, model as such. Okay, right, or mix. Right, that is ASIM portal. Under the ASIM portal, essentially we are trying to have data related to all of these particular employees or let's say people who are searching for the jobs, right, and we will help them to search for jobs based on the job skills or the skill sets that they actually have. That is ASIM portal. And the last one, PM Daksh, Pradhan Mantri Dakshta or Kaushalta Sampann Hitagrahi. Right, under this particular PM Daksh, again we want to cover certain aspects of unorganized economy. There are certain people, let's say workers or the people from let's say scheduled caste, right, or people who are working as a Swachhata, right, workers as such. There are certain marginalized people. We want to cover them under this particular PM Daksh Yojana. We want to skill them, we want to reskill them or upskill them and ensure that they will be absorbed in the market or in the labor market. Right, so these are some of the very very important reforms that the Government of India has taken under the initiative of skilling. Done? So finally, the discussion about growth now. Okay, final aspect of economic survey related to growth. Now please understand this. For the current financial year, have a look at this. Right, that is the next financial year. The survey simply says that we will be able to achieve around this particular growth rate. And for current financial year also, they have given a target. Should you mug it up? Absolutely no, do not mug it up. Why? They are just giving you estimate. They are just giving you estimate. Whether we will end up achieving that or not depends on so many other factors. I will come to that also. So generally when you discuss about growth, right, you can discuss this under this particular aspect. I am pretty sure all of you know the formula for the calculation of GDP. Right, one of the methodologies to calculate GDP, that is from the demand side, you can calculate GDP in this particular form: C plus I plus G plus X minus M, where C refers to consumption done by the households, I represents gross fixed capital formation, that is investment done by the private sector companies, G represents the expenditure done by the Government of India, X represents imports, and X represents exports and M represents imports. This is one way, one of the three ways to calculate GDP. Now how can I basically synchronize this particular formula with the discussion about GDP? Have a look at this. The total consumption, okay, the total consumption for 21-22 has basically increased by 7%. Is that okay? The total consumption for the year 21-22 has increased by around 7%, right, compared to a contraction in the previous year. Compared to a contraction in the previous year, it has increased by 7% in the year 21-22. And not just that, when you compare, right, this particular consumption growth or consumption for the year 21-22 with the pre-pandemic situation, is it okay? If you compare what is the growth, how much is the total consumption here with the pre-pandemic situation, we have almost hit recovery. We have almost hit recovery. And out of this particular total consumption, government consumption has already crossed the pre-pandemic situation, but it is the private consumption which is actually still lagging behind. Private consumption essentially means how much is the total expenditure on goods and services done by the households. Right? We are still lagging behind. Now some of you will have a confusion here. Confusion is, sir, in case of 21-22, the growth rate in case of private consumption is 6.9%, but you are saying the consumption from the private, the private consumption is still lagging behind the pre-pandemic situation. Whereas in the year 1920, which is considered to be a pre-pandemic, the growth rate in the private consumption was 5.5. Here it is 6.9. Don't you think it should be higher? No, absolutely no. First and foremost, 2 points here. These are growth rates. These are growth rates. These are not representing what is the total value of consumption. Sir, can you elaborate? Of course, I will elaborate. Do not mug it up. Imagine, right, 1000 rupees the total private consumption. In the year 2019 and 20, it will increase by 10%. Is it okay? It will increase by 10% to reach 1100. From 2019 and 20, imagine for 2020-21, it will drop by 10%. I can say it will drop by 10%. So 1100, 10% drop in the private consumption essentially will drag it down to 990 rupees. And let's say from 2021 to 21-22, again it will increase by 10%, which will take this particular private consumption to 1089 rupees. If you have not understood anything in the calculation, don't worry, ignore it. Those who have understood, have a look at this. In the year 21-22, no doubt, private consumption has increased by 10%. Right? But do you think it is higher than the pre-pandemic consumption? Absolutely no. That is what I am saying here. Okay, so private consumption, it is yet to recover. It is yet to reach the pre-pandemic level. What about private sector gross capital formation or gross fixed capital formation? It has already crossed the pre-pandemic level. So looking at all of this, and if you look at even the exports have crossed the pre-pandemic level. But having said so, look at the imports also. Imports also have performed better, recovered better, as a result of which last week we have discussed this. India is now having a trade deficit all over again. Done? Right? So these are some of the important points in the context of growth. And how much these will contribute? How much these generally contribute to GDP? Why do we say that households should start consuming more? Households should demand more and more goods and services and consume more. Very simple. Out of the total 100 rupee GDP, assume 100 rupees the value of GDP in India. Around 58 rupees actually comes because of household consumption. Have a look at this. Around 58 rupees actually comes because of household consumption. And that is the reason when the households will start consuming more, start spending more, automatically you will see that there is a recovery in the economy. Okay? What about the government consumption, government expenditure? Around 12%, 12 rupee. What about private sector? 29 rupee. And if you compare it to earlier situation, it has actually increased. It is at a very, very high level now. Look at 2019 and 20, it was 28.8 rupees. In 2021, 27 rupees. Now it is actually 29 rupees, which essentially means the contribution of the private sector in terms of a GDP has actually increased. Okay, it has actually increased. And exports contribute around 20 rupees and imports they are deducted, right, or they take out around 23 rupees out of the total calculation. Done? So these are some of the important points. Just have a look at gross fixed capital formation here. Okay, gross fixed capital formation, it is growing at a very, very fast pace. You can see the growth rate here, and this particular green line just represents how much is a gross fixed capital formation out of the total GDP value, that is in terms of percentage. right? So both are in favor of the recovery in the economy, and that is the precise reason the survey says that for the financial year 23, India is poised to grow or achieve a growth rate of 8% to 8.5%. And for this year also, the survey says, because Government of India has taken care and implemented certain supply side reforms, there is right stability in the banking sector. They are about to start lending more and more. The private sector, right, if you just remember 2 minutes ago we have discussed this, there is a recovery in the private sector investment. Their contribution to GFCF has actually increased. So all of these particular factors put together, even for this year, there could be a much higher recovery in the economy. And for the upcoming year, that is a financial year 23, we might end up achieving a growth rate in the range of 8% to 8.5%. Again, don't have to mug up, but the survey makes certain assumptions. What are the assumptions? It simply says that there is no debilitating, right? There is no higher impact of the pandemic again on the Indian economy. Imagine there is one more wave of the pandemic, much severe, and there is a complete lockdown throughout India. Again, I am saying imagine, right? Hypothetical situation, right? Do not start messaging your friends saying that, hey, this fellow is saying there is a pandemic, one more wave. No, I am simply saying, when the survey says we might achieve this particular growth rate, it is simply assuming that there is no more wave of pandemic and which will not have a severe impact on the economy. That is the first point. Second point, it also basically assumes that crude oil prices will not cross beyond certain level. Is it okay? They will not cross beyond certain level. Third, the international prices of metals, other commodities will also not start rising. They will start cooling down. Right, whatever disruptions have been created in the supply chain will become normal in the coming year. If all of this will happen, right, India will be on path to achieve this particular growth rate for the financial year. Done? So these are certain very important aspects that you need to understand from the context of the economic survey for the year 21 and 2022. So that's it from my side. Before I wind up, if you have liked this particular initiative, please hit the like button and provide your valuable comments in the sections below. And as usual, if you have not yet subscribed to BYJU'S Exam Prep IAS, kindly subscribe and tell about these particular initiatives to all of your friends so that they will also get the benefit of these videos. Thank you. Take care.